get Cheyenne on the show today. We will talk a little bit about the budget, though I don't think from a structural perspective there are too many changes on the mutual fund arena. From the budget standpoint, so to say, it's steady as she goes. But so we'll talk about that. But because there's nothing too much major, we'll talk about it towards the end. At the start, though, what we'll talk about are two things. One, which became a pot boiler a couple of days back, wherein there was, as per the guidelines, fresh inflows into funds which invest indirectly or directly into international assets. There's a stoppage there. I presume it is still there and waiting to be resolved. Or what is this whole issue about? When does it get solved? And what happens to your existing SIPs or forthcoming SIPs, or for that matter, upcoming lump sums that you wanted to do into any of these products? Can you do that or no? And how can you do that? And when can you do that? So we'll talk about that in detail, because now, unlike what used to happen 3 months ago or 3 years ago, there are a bunch of products out there which cater to this. So it will be very important, because I'm sure your, mine, and a lot of other people's lives get impacted by that. Investing lives, that is. Then we will talk about this whole concept of quant funds and quant funds versus factor funds. Are they materially different? Are they not? And should you get confused if somebody tells you buy X over Y, why or why not? So we'll talk about all of that too. We've, of course, got an interested party in terms of an AMC, and representing DSP Mutual Fund is Anil. Ghelani, needs no introduction, fairly active on Twitter, as also is Kshitiz Mahajan, fairly active on Twitter, but very knowledgeable on all of these aspects. And he joins in. He's, of course, co-founder of Complete Circle Consultants. Gentlemen, both of you, thank you so much for joining in. And I hope all is safe. Anil, I'll start off with you first. Does this come as a bit of a rude shock or something that you would have lived without? I mean, this whole stoppage of, I presume it is still active, that people can't invest into some of the funds of yours which invest in international assets.
Yes, Neeraj, you're absolutely right. This is a industry-wide limit which has come into play. For us as a house, or for many individual fund houses, there is still room. There is an individual fund house limit, and over and above that, there is a total mutual fund level limit. So I'll very quickly distill the two. So there is one limit of $7 billion where any mutual fund investing into overseas securities, so it could be stocks, it could be actively managed underlying funds, etc., that all mutual funds put together, we can go up to 7 billion. And there is a separate limit of 1 billion where we can invest into ETFs which are listed overseas. So as we speak, this first category of the limit of 7 billion has got almost near to getting filled. So with that aspect that is almost near to getting filled, and mind you, friends over here, it's not a limit by SEBI. It is a limit indirectly put in by RBI. So RBI puts a industry level limit on all mutual funds regulated by SEBI. Hence, as a measure of prudent approach, all mutual funds, it's better to stop that particular further investment going into overseas securities till the time that limit gets expanded. So you are absolutely right. As we speak, that the limit still is in place. Hence, as a result of that, from yesterday onwards, all the fund houses, as per the industry body AMFI, it was decided jointly that all fund houses will stop accepting fresh inflows into any of these funds which are investing in overseas securities. But let's say, for example, there are certain funds which are investing overseas ETF. Like, for example, I don't mean to really highlight or discuss about any particular fund, but for example, right now for us, we have a fund running, DSP Global Innovation Fund. In that, we are going to make investment into 2 ETFs. So those are still being permitted, and we are accepting funds in that. NFO is live and running and going on for investors to allocate money over there. And only those ETFs where there is space, we can invest. But other than that, currently there has been a stoppage which has been incorporated industry-wide for all set of investors. And friends, I'd like to highlight this includes lump sum investment as well as new SIPs or STP, any systematic plans, new incremental. But if you have an existing SIP running, then that continues as of now. We have not come to a roadblock on that, because if somebody has already registered an SIP, let's say, for example, into some fund which is investing in overseas securities, that would continue for now.
Oh, okay. Okay, Kshitiz, can I bring you in? So, is this, which means all the, as per what Anil is saying and as per your understanding, you would say that all the existing SIPs that people have, which have been running for whether 1 month, whether 1 year, whether 5 years, that is not coming to a stop. Only people who want to do an incremental fresh application, either for an SIP or a lump sum, only that has stopped. And can you also explain that small part wherein Anil was mentioning that some ETFs are allowed, but some non-ETFs or other funds are not? Can you talk a bit about that? And I'll of course come back to Anil for further explanation as well, Shittu.
So yes, Neeraj, what Anil was saying is right, that for the existing clients who are doing their SIP or their STPs, it will continue. And for anybody who's coming in new, they can't register for any SIP or any lump sum allocation. Having said that, most of the fund houses, they have stopped taking allocation much before their entire limit has been burst. Like Motilal still has 110 or 120 crores limit, which is lying with them. Similarly for DSP also. And yes, all the fund of fund feeder route, which was the 7 billion limit, it has been exhausted, almost about exhausted. There will be no new allocation till the time the limit has not been increased. So just to give a comfort, I think the same thing happened in this November 2020, when the limit has been increased from 300 to 600 billion. And in June 2021, the same has been increased to 1 billion per fund house also. So this is a part of RBI controlling currency going out. That's how they do when you allocate outside. I think a petition has been filed by most of the AMFI and other people, and it will take some time, and this will be approved. Now coming back to how it works, like 1 billion is the limit per fund house for fund of fund. There are 7 fund houses, and 1 billion is overall limit for an ETF. Now in ETF, when you do an ETF, you are not buying any fund. You are just replicating a fund or let's say an index which is outside. Like what Anil mentioned about, they were supposed to have 5 different, 3 fund of fund and 2 ETF in their fund, which is a new fund, innovation fund, which is going on. Again, I'm not recommending any fund here, but I'm saying right now they have decided they'll go with 2 ETF, which they can do. Similarly, there are options with Motilal, like they have their Nasdaq ETF and they have their Far East ETF, which is there, and then next 50 Nasdaq ETF is there, where they can accept some allocation through DMAT trading only. So how it works, Neeraj, when you invest into an ETF, in AMC you can give a physical application also, depending on a lot size. They define a lot size how you can give, or you can buy straight away from, let's say, whatever app you are trading on, NSE or BSE also. But in this case, you can only trade from the terminal, but you can't buy a physical units from AMC. They are not accepting that. Having said that, because there is a market maker involved here in India and volumes are not on Nasdaq, yeah, volumes are good, but other ETFs which are right now traded in Indian markets, which give you access to global allocation, volumes are not that good. So there are spreads, the market maker spread which it makes. Maybe that's not be conducive for most of the clients who are looking at foreign allocation right now. So my request, or maybe my thought is that one should actually look at right now postponing, or they can evaluate their pros and cons on the existing funds, like what Anil is talking about, ESP fund. Otherwise, you can just wait for some time and allow this entire thing to settle and limits to increase, and then you can start again.
Okay, but that's for the incremental ones. Yeah, Anil, please.
I'll just add, sorry, a little bit correction, Kshitiz, and why I mentioned that this is structural limit which has got hit. See, RBI prescribes the overall limits for MF as an industry, which is 7 billion. Okay, within that, then SEBI had taken the view and given different numbers. For example, you said a couple of months back or a year or two back, each fund house had a limit of 300. So let's say 1 or 2 fund houses approached that limit and they reached out to SEBI. 300 has got touched. So they said, okay, but within overall of 7 billion, there is a lot of space. So okay, let me instead of that increase to 600. For example, just in a history, we as a DSP, we were initial players to start international feeder funds. So 2006, we started DSP World Gold Fund, then World Energy, World Mining, US Flexible, etc. So very fast, we had finished in that time our 300 million limit. So we approached SEBI and they said, okay, you are finishing 300, I'm giving you another 300. So now DSP, you have 600. This time they said, instead of giving to individual fund house like that, we'll make it industry level. So they issued a circular. Okay, any fund house can go up to 600. Then they said up to 1 billion. But they could not touch total limit of 7 billion because that is blessings from, controlled limit from RBI. So currently, Kshitiz and Neeraj, where we are as an industry, is that we have reached that total limit. So SEBI, even if we approach, we have already, they can't reallocate between one house to another or increase that. It's a overall limit which has to get opened up.
Yeah, the same has been decided in 2008, you're right, by RBI. And since then, the limit is same.
Yes, so this was done in 2008.
On the fund out, that's what you're right. On the fund out side, they have decided to increase the limit.
Yeah, on the fund out side, it was fairly simple and it was on quite a fast track. So, it didn't create any technically sort of disruption. Fund house was about to reach that internal threshold of 300 or 600. They approached SEBI. SEBI said, yeah, okay, overall limit is open. I have a flexibility. Take it. Now here, it is stopped basically. Right.
So now how does the life of me as an investor change? You are saying that if my SIPs were on, they continue. I can't make a fresh application. I have to wait for some circulars or some circulars from you, from the industry, because the industry will get those permissions from the Reserve Bank of India. Until then, I can't make a fresh application, but the actual existing SIPs continue, right?
That's right. Existing SIP continue temporarily, very clearly, because as I'll just repeat that right now, we as an industry are very close to hitting that limit.
Okay.
So if temporary SIPs continue, then we are still within the limit. Some amounts will keep going. But at some stage, suppose, I'm just saying, we find that that limit suddenly gets very fast filled up, then it's a mandatory thing. SEBI will stop that. We can't do.
Okay.
But the hope is that it's very much informed to the policymakers. Everybody's watching the number very closely. One can assume that maybe there was a busy season because of the recent budget-related matters and all that. One can hope, we are very hopeful that it will get done very fast.
Got it. Okay. Kshitiz, just one quick question. In the remote chances that such a stage comes wherein the limits haven't been revised upwards and the SIPs by themselves, the existing SIPs go over the total limit, what option does an investor have then to invest in international assets, aside of course, the mutual fund route or the direct stocks route, which I think a few brokers are giving in India currently?
So, Neeraj, yes, I think if limit will be breached, then all AMCs, they need to stop such. Having said that, I don't see that happening.
Sure.
Yes, because in 2008, when the limit was set, we were almost at $300 billion foreign reserve. Right now, it's close to about $700. There's no reason limits will not be increased. Having said that, 1% also, if this will happen, then options are available with Indian investors right now to invest directly into these stocks also. And these are not, new names or fairy tale names which we are talking about. Everybody knows about these stocks. And most of the cases, if people can evaluate their risk appetite, and I strongly, I always say that one should have 10 to 15% allocation in international stocks or let's say international funds. People who have time, they can do it themselves. There's no rocket science. If I tell here that one should buy Amazon or Apple, again, there are no recommendations here, but there are platforms available here. And I know a couple of platforms who are coming up also in a very good way, started by our colleagues only. So I think they are doing fine. And many of the clients are looking at having that, direct holding of stocks. So interestingly, in India, if you have to buy a Reliance share, you have to shell out 2,300, 2,400 rupees. But in US, fractional buying is also allowed. Now, you can buy a $300,000 or $3,000 Amazon in one go. So you can buy in fraction also. So one option is you can buy, through this route, you can open an account and you can buy.
But non-direct stock, Kshitiz, ETF route or any other possibility?
This is a direct stock, but ETF route is also available. You have to open an account in Singapore or Dubai. And through there, you can actually buy whatever ETFs that you can't buy right now here. There are ETFs available there also. You can buy any funds through that also. You can do that also. But yes, the cult of owning all these big names like Tesla, Amazon, Apple, Microsoft, it is increasing down the line. I know many people in my circle only who now want this international flavor also in the portfolio. I think if this will not increase sooner, then you might see that cult going or maybe increasing a bit from here onwards.
Got it. Okay, last piece on this before we move on to the next one. Anil, very quickly, I heard you mention at the start that while some of the SIPs in some of the existing funds, etc., might be under issue, but there are some options offered by you guys only, which don't result in breaching of this limit.
Correct. Which is what, like, for example, any fund like DSP, the Global Innovation Fund, in that fund, our underlying investment is into ETFs. So there is no restrictions.
And there is no restriction. Even if the limit is breached, which you were talking about earlier, this option will still remain open.
Exactly that. This is a separate limit of $1 billion, where we are very comfortable right now as an industry as a whole. So there is no discomfort that lump sum, SIP, anything is welcome and open.
Got it. Okay.
Yeah. So I feel personally, for a retail HNI investor who wants to invest small amounts, this is the more suitable route, because you come into INR rupee term, just go to the normal any website or any various portals or exchange platform, buy as little as 5,000 rupees to 50 lakh rupees or 5 crore rupees, no tension. Over there directly, Kshitiz, you mentioned very good solution, superb. I completely agree with that, and it's very seamless and very easy nowadays. But still, there is some little bit restriction, like if you are going through LRS route, $2.5 lakh restriction, taking the FX risk, etc. So that is also superb, provided you have that kind of a skill set to do it. But otherwise, both are easily available.
Got it. Okay. So thank you. Thank you for giving us this lowdown. I just believe that a lot of people will be happy to know that their existing SIPs are not under threat as of now, and hopefully by then the limits will get resolved. So that's one thing out of the way. Part 2 of my conversation was around factor funds and quant funds. Now, Kshitiz, I'll start off this conversation with you. Is there a major difference, and do you prefer one over the other?
So I think underlying technology, if you actually ask me, is same for both the funds, but only disclosure is there in factor fund. It's not there in quant. Quant is more of a scientific model based, or let's say AI based. Now many funds are now coming with AI technology also, where they put some filters on that AI. It can be Jensen alpha, it can be PE, PV, any other ratios, domestic, international, different asset classes, and they all just go through the entire process, and end of the day they filter out that this is the portfolio which they have to work out and carve out. Wherein factor is been disclosed properly, that you want to play momentum, you want to play growth, you want to play value, everything's been disclosed properly in the fund, and that's a broader difference. That factor is a good combination of your active and passive fund, which give you a little edge on the return with little less risk, because you filter out little, I'll not say shady, but little less good stocks, whether it's little more good stocks. That's what it does. So that's the broader difference between these two, I see. And but in India there are many misnomers, I must say. Many of the fund, they call them as quant, but they're not quant. They are a factor or smart beta funds. So in fact, thanks to you, Neeraj, because of you, I have gone through myself through these models and realized that many of the funds are actually smart beta, not quant fund, because they're disclosing everything what they are doing. Neeraj, you're not audible.
Yeah, sorry. Anil, is there a large difference? Because I presume you're of the belief that there isn't too much of a difference out there.
Yeah, absolutely. So it's like it's one and the same. So I'll just take 1 minute separately to first define what we mean as factors. Okay, and I'll take it with a small example. Let's say when we are looking at a food item, right? If let's say we are given a diet by our dietitian, that you have to X quantity of proteins, mineral, carbohydrates, right? So we don't look at the food item we are eating. We dissect it into different components. That this item today I had my lunch, I finished X component of carbohydrate, Y component of protein. Now I have got so much fat remaining, I have to somehow get it in my dinner. Likewise, for each security or stock or index or whatever you call it, each item, you can dissect its risk and return objectives into different elements, which are nothing but what we define as factors. It can be momentum, value, growth, quality, etc. Right? So now with that conceptual thing in mind, when you are looking at, let's say that dietitian has said, Neeraj bhai, you are currently little less on protein as an intake because of various reasons in this work from home. So you have to have a protein heavy diet. Dietitian has guided you. So now you will ignore the food item, you look at protein content in your food items. Likewise, your advisor like a Kshitiz bhai or somebody who's like a financial advisor has guided as a client. You need to have, currently there is a view that you should have momentum based allocation more in your portfolio. So now they will look at momentum funds where asset managers like us will say, okay, you want single factor funds, take this is one momentum fund. You want quality, let's say there is a one quality focused fund. You want a multi-factor fund, means if your dietitian or your advisor has said, Neeraj bhai, little bit protein as well as carbohydrates wala diet aap rakhna. So now Kshitiz will say, I want something which is momentum and low volatility. Can you create a fund like that? Yes, okay. So I am now having multi-factor. So for example, we at DSP, we have one fund called DSP Quant Fund. Nothing about that fund or recommending anything, just highlighting the characteristic. That fund is a multi-factor fund. It has got combination of 3 factors. It has got a combination of quality, growth, and value. Then there is another fund and that fund is, name is DSP Quant Fund. But what are we doing? We are using 3 different factors, combining it into a model and running that. The outcome of that is very similar to a single factor fund. Like for example, we have a fund which is having single factor like quality, called DSP Nifty Midcap 150 Quality 50. Single factor quality. Outcome of both of these, as Kshitiz mentioned very beautifully, is that it eliminates or dissects certain segments of stocks which are not in line with that particular factor or that particular filter is being applied, whether through AI or through individual or through the exchange or like a index provider or in-house model. All that becomes secondary. So in short, once you get that thinking clear, then it's very clear. This is all it's just a name, whether you call it quant fund, factor fund, quality, momentum, but all these are factors. And the way in which you package it, if you package it like an index fund or ETF, you have to compulsorily have it as a public index, and which has to be disclosed on the website of either the index product, like for example, NSE or BSE, live tick by tick running has to be done. Or if you do it in-house as a model, then you have to still disclose, because like in our website, if you go to DSP Quant Fund, each and every detailed disclosure will be there, how that factor is being run. But it is not a live index on a public website. That's the difference.
Got it. Kshitiz, just one last question on this again. And after we thank Anil, of course, we will want some recommendations from you, Kshitiz, if you can. But just one quick follow-up there. So while DSP might be doing a lot of disclosures in their quant fund, have you seen examples of quant funds which are separate or different from factor funds, in that the factor funds do a lot more disclosure than what a quant fund does about the methodology?
So yes, factor funds, they disclose much more than what a normal quant fund does. Quant fund talks about that, various spreads or technology through which they are filtering it out. There are a lot of good funds. Yeah, DSP, and it's not that he's sitting, that's what I'm saying. DSP Quant Fund is a good fund, but I still feel it's a factor fund. It's not a quant fund. I said it's a misnomer because very beautifully they disclose. In fact, while studying for this entire process, I've studied their and Tata Fund. Tata Quant Fund is actually a true quant fund, because the way they are working on various ratios, they are working on various global scenarios, they're looking at macros, and that they are filtering it out. That's one of the good fund. DSP we have also taken. ICICI has a very good offering on the quant side. Axis has a very good quant fund which works on price to earning, price to book value, and dividend yield model. So there are 3-4 good funds which one can look at. But again, as said by Anil, one should look at not making, talking about returns which are out of the world. It is just that you are making your risk appetite, you are making your risk little less, and you are making return little extra. That's the only difference it goes through by looking at what actually suits you. Now, some client will say, okay, I'm a growth style investor. I should look at a growth side only. He will look at a fund which is more of growth or a momentum oriented portfolio, which has like ICICI, very good. ICICI has a momentum portfolio. Edelweiss has a momentum portfolio, Nifty momentum. They call it Nifty 30 momentum portfolio, where the growth is coming. So I'm saying these type of funds one can look at depending on his or her style of investing. So these are the funds which we can look at.
Okay. Thanks for beautifully explaining that, both of you. Now, before we wrap up, just a very quick synopsis. We'll make it about a minute each. Is there something in the budget that stood out for you, not from a perspective of what sectors will do well or stocks will do well? We've kind of done numerous discussions there, but from a mutual fund investor's perspective, if the life changed pre or post budget. Anil, to you first.
Structurally, as a mutual fund investor, in general, I think nothing has changed. Or I would say, as a retail individual, not an investor also, nothing much has changed. Yes, no doubt certain structural changes have happened, which will have medium to long-term impact and implications, which will result in, let's say, for example, as an investor, maybe better growth in terms of the underlying economy and or maybe underlying certain sectors and all. But otherwise, structurally, as a mutual fund investor, I would not like to venture into any particular big changes. Nothing has changed because
nothing's changed. Kshitiz, what about you? Any thoughts? Anything that's changed?
So I think for the industry, a lot has been changed. Thanks to the tax which has come on crypto, you will find some serious investor coming through mutual fund route now, because nothing is that easy to make on crypto. Second, I think the capex which they have decided of 6.7 lakh crore, which is 35% increment on what is the base right now, will give a lot of boost to technology and infra space. So those funds, one can actually start looking at, maybe if you have not taken some allocation, again this is my view, it's totally personal to me, you can start looking at those funds where they have some more allocation towards technology as well as infra. Just to give just to summarize by saying this, that if you actually see the broad index across globe, whether I'm not about NASA, I'm talking about S&P 500, or let's say Germany or Japan or China, there the technology or IT participation is 30-31%. In India, it's only 17-18%. So I think we will cover up. And as a country, I was just looking at as a technology partner, we are becoming very serious about our various partners across the globe. So I think infra space should look at doing well, as well as your technology space should do well. That's these are the two spaces, and people can actually look at few funds like HDFC Focus, Kotak, Economy Recovery Fund. Then then you have one very good fund by DSP Infra, which is there. So I think you can actually look at the portfolios where you can actually see some little extra allocation on these lines.
Got it. Okay, gentlemen, both of you, thank you so much for taking the time out and giving us some details, more importantly about the whole international piece, because that's very vital. A lot of queries, a lot of question marks. I'm sure this show answers all of those. So thank you so much for that, and have a great evening today.
Thank you. Thank you. Bye.
Thank you.
And viewers, thanks for tuning in.